Hello. The company being analyzed today is RMC Switchgears Ltd. This is an electrical equipment manufacturing company. So it manufactures some electrical equipments. To give an example of what it does, for example, one of its products is a feeder pillar. Okay. You may have seen these in the outside, while going outside, while outside. It's a weatherproof outdoor electrical enclosure. Okay. Something that acts as a box that encloses something electrical enclosure that acts as a central control point to safely distribute and manage electrical power from main supply to multiple secondary circuits or loads. So, in the power distribution system, the power supply chain, it's one of the electrical components that are used to safely distribute power. Then, it also manufactures RMC switchgear, also manufactures a distribution board. This is one of its products. Okay. A distribution board is a central electrical hub in a building that receives the main power supply and divides it into smaller protected circuits. Again, electrical equipment used in the power distribution system. Then a switchgear. It also manufactures a switchgear. A switchgear is a critical electrical system assembly that controls, protects, and isolates electrical equipment and circuits within the power distribution system. Okay, so it controls and it protects electrical equipment within the power distribution system. So another basically electrical equipment. So it manufactures stuff like that. These are one of its products. We will cover all this. Now, this is an extremely fast growing company. And the reason why this company is being covered is one, person asked me. Second, this. These are revenue projections given by the company all the way to 2030. And these are some massive projections. So for fiscal year 2025, they projected revenues of 319.42 crores. Sorry, they have revenues of 319.42 crores. They posted an EBITDA of here you can see 54.49 crore rupees. Okay, giving an EBITDA margin of 17%. We have net profit below me, directly below me, of 31.46 crores, finally giving it a net profit margin of 9.35, 9.85%. This is the current revenue and the profits. They are projecting that by next year, the revenues are going to double to 723.25 crores, more than double. They're projecting the net profit to also double, 71.57 crore rupees. And by 2030, you can see these massive projection rates. By 2030, they're projecting that the revenue is going to be 4,458.38 crores. 4,458 crores. More than 10x, massively more than 10x. I think that may be like 14x. And they're projecting the net profits by 2030 to reach 335.37 crores. More than 10x current revenue and no, more than 10x current profits. And they're projecting that the profits in 2030 are going to be more, slightly more than the revenue in 2025. So they're projecting some crazy numbers, and they must have made these projections of something, some kind of estimations of the market on the way of they're introducing more products in the industries they're engaged in. Maybe they're going for massive capacity expansion. So let's find out. Let's find out the current financials and what they're doing and the future outlook they're projecting. Why they're projecting this. First, let's see the market cap 765 crore company, a small cap company. The price to earnings ratio of 24.3, okay, moderate. Current price of one share is 727 rupees. The return on equity is 37.5%. Return on capital employed is 37.2%. A really nice number. Return on capital employed, return on equity. The book value per share is 102 rupees. Okay, let's take a look at the profit and loss. Now we got numbers all the way from 2014 to all the way to 2025. We already saw 2025 numbers. Now, one thing you may notice in these early figures, in these early years, the profit before tax is not looking that good. Okay. So wasn't the most profitable company. It was a very small company, still is, but okay. So in 2014, we have revenue of 40 crores. In 2018, we have revenues of 83 crores. And after 2019, there was a massive dip. Could be COVID, leading to 2022 revenues being only 42 crores. Then post-COVID, okay, massive boom. Revenues reaching 125 crores in 2023 and 2025, 316 crores. These percentages, these are the operating profit margins. Usually, this company has displayed double digit operating profit margins. And in percentages term, these growth rates do look extremely good. Compounded sales growth reaching 10% is 21% annualized compounded sales growth, massive. But last 3 years, compounded sales growth of 97%, meaning sales grew by 97% in 1 year, and again grew by 97% on the first year's sales. Well, first year sales grew by 97%, and the second year sales show growth on 97% on the base of the second year. And compounded profit growth, 10 years has been 63%, last 10 years, last 5 years has been 149%, last 3 years, 278%. So big numbers, kind of numb to look at it. Makes me feel numb to look at such massive revenue growth numbers. Again, the base was extremely low. Return on equity has shown constant improvement. 10 years ago was 21%, 5 years ago 26%, 3 years ago 34%, and last year was 38%. Cash flows, um, not really, not really a lot of cash flows. Now, here you can see cash flow from operating activity reaching only 4 crores in 2017, 6 crores in 2015, all the way till 2022. You can see it has fluctuated, remain at the same level. The 2021 did reach 9 crores, and in 2015 it reached 15 crores, a new high, but not the most cash flow positive company. And interest and depreciation and working capital changes may eat into the free cash flow of the company. You can see it does produce positive operating cash flow, but compared to its size, yeah, it's not the most at all. Let's see what the company is actually doing. We already saw these crazy projections. Now we start from all the way here. RMC's diverse offerings, the business verticals. What are the different segments? One are the electrical products segment. Okay, they make smart meter enclosures. We already covered this. We covered feeder pillars, distribution boxes, electrical panels. We already covered this. Okay, it contributed to 19.24% the total revenue in fiscal year 2025, amounting to 60.84 crores. Expected contribution by 2026 is 10% because they're expanding one other business, which we will cover. Okay. Margin for this business is 10 to 15% EBITDA margin. Okay. And we have electrical EPC. What is electrical EPC? EPC, engineering, procurement, and construction, where they make a product for a client. Okay. They will engineer a design a product for a client. They will procure the raw material and they will construct the product and then give it to the client. So they won't own the product, they will only construct it. T&D infrastructure, smart grids, and substation automation, special electrical projects. So they make all these like T&D, trading and distribution infrastructure, special electrical projects, they'll make them for clients. This contributed to 80.21% of the top line, total revenue in fiscal year 2025, amounting to 253.7 crores. Expected contribution to revenue is only 30% because of the next revenue segment. And this is the high margin product, high margin business, 20 25% EBITDA margin. So mix of these two businesses give the company an EBITDA margin of around 17% in fiscal year 2025. Next segment, which is currently very small, is solar EPC. Again, engineering, procurement, construction. So they're making solar products. What are they making? Solar pumps. They're making rooftop solar installations and ground mounted solar. 1.74 crores revenue was there this year, only 0.55%. By next year, they are projecting such massive expansion that they expect this solar EPC segment to contribute 45% to revenue in fiscal 2026. Expected margin 10 to 15%. Then the newest segment they added is this. This is not producing any revenue right now, but it's expected to. Okay. Solar products. Here they will make solar modules and structure manufacturing. What is a solar module? A solar panel. Okay, a solar panel consists of solar modules. So, like there's a solar module. There's one small solar module, a bunch of them attached together that will kind of make a solar panel. So it's a unit of solar panels. You can say solar modules. So solar modules they're manufacturing. They expect that by next year it's going to contribute 15% of the revenues. So again, massive expansion in the solar category. All right, this is the main reason for the massive revenue projections we saw earlier. These two new segments, because solar is expected to continue to boom in India. Expected margins of 15 to 18%. These are the EBITDA margins they expect. Now, growth drivers, RDSS incentives, smart metering push, trading and distribution upgrades. Okay, if you're wondering what RDSS is, let me just go there. RDSS is a government scheme. Okay? It's another government scheme. It is the revamped distribution sector scheme. Okay, it is an outlay of 3,03,754 crores. This is the total funding. Okay, this funding is going to be given to discom companies, distribution companies, power departments, providing financial assistance for prepaid, smart metering, system metering, loss reduction, and distribution infrastructure. Now, smart metering, system metering, distribution infrastructure. This is the business segment of RMC Switchgears. So again, 3,03,000 crore rupees is the current budget, okay, given to these companies and for these things. These are one of the incentives, one of the reasons why they're projecting big growth. These are one of the growth drivers here they have written. Okay, so government schemes are a big thing for the company. Then for their electrical equipments, the biggest segment, what is the growth driver? 2.5 trillion rupees has already been invested in smart grid investments. Okay, the government of India plans to invest 9.12 lakh crores in power transmission upgrades. Again, government, government. Now, again, for the solar EPC, the government is targeting 280 gigawatt solar target by 2030. And they're giving domestic solar manufacturers incentives so they can produce this much solar capacity. Massive solar target. Then, for solar modules, again, ties back to solar also. India aims to achieve 500 gigawatts of renewable energy capacity by 2030. To give an assessment of how big this actually is, India's current total total energy capacity is renewable energy capacity is around 234.24 gigawatts. So this goal of 500 gigawatts, right? This goal of 500 gigawatts will be more than double, and it's currently more than India's total energy capacity of 480 something gigawatts. I think so. So massive, massive government aims, and I guess all these segments seems to have a lot of growth potential. That is what they're trying to say. Let's continue. Let's continue. Moving on. Moving on. Integrated business model. How they each of their segments complement, help each other. Okay. So let's start with the electrical EPC. Electrical EPC. The electrical EPC business requires their own smart meter enclosures. It requires their own feeder pillars and their own LT panels. So the electrical product segment It manufactures all these things, smart metering, enclosures, and all that for the electrical EPC. Like you can see, it derives demand from the T and D trading and distribution EPC and utility projects. So not only will they give this to their clients, they will also give this to their other segment to help each other. And it makes things faster because they can communicate better because they're from the same company. Then the solar EPC. The solar EPC revenue, the solar EPC business needs their needs solar modules. It needs mounting structures. Okay. So they have now introduced their own solar product segment. This will support their solar EPC projects plus external market demand. It's a new revenue stream and it will lead to better supply chain control and scalability. Better scalability for the solar EPC also. Why? Because again, they will be the ones supplying the solar modules that solar EPC needs. Now, impact on growth, each revenue segment, okay, like solar EPC. Solar EPC has lower project costs, better margins, and increased solar installations. So each revenue segment provides integration, provides help to other revenue segments, and this end-to-end synergy for maximum growth and profitability. So they're looking for basically integration, backward integration to boost timelines to make things faster and smoother. Then, how this boosts top line and bottom line. There's cross selling, there's bundled solutions, and there's large project wins. Bundled solutions. Now, RMC Switchgears can sell all of these things as a package. They can sell solar EPC like a client. They can sell to the same client solar EPC. If the client want modules for the solar EPC, they will give. If the client wants trading and distribution EPC projects, RMC can give. And for the meters required for that, the trading and distribution project, RMC can also give. Then better margins because the cost savings from their own in-house products. Scalability, there's going to be faster execution with internal supply chain efficiency because again, everything is going to come from in-house. Better decision making. We move on. Okay. With their solar module manufacturing expansion, this new segment they're having, solar modules, it's going to have backward integration in solar EPC. That is one. They're saying it's going to have improved cash flow management. If this improves cash flow, that's going to be really nice. It's going to optimize the project margins and stronger government tender bids. They're now going to have a stronger position to bid for government projects. Again, because of the integration, backward integration, there you can say, what do we say? Their capacity to manufacture has increased because of this backward integration. Moving on, the diverse offerings. This is the product portfolio. Meter box, distribution box. I think we've covered all these. A lot of products. You can search them up if you want, if you're interested. Feeder pillars, we saw that. But junction box, okay. Let's move on. What else? Yes. Who are the clients? Strong base of pedigree customers. State power utilities. So state power utilities seem to be the main customers. Look at these. Look at all these companies. You got the Jodhpur Vidyut Dat Vitaran Nigam. Okay, we got the Uttar Pradesh Power Corporation. We got the Maharashtra State Electricity Distribution and all these other clients. Then, other than state power utilities, we have EPC or smart metering EPC. So the EPC segment, the smart metering EPC segment, who are the customers there? We've got Adani Energy Solutions, we've got Bajaj, we've got Ashoka Buildcon, Tata Projects, we've got Larsen Toubro. And for the meter manufacturing business, or are they meter manufacturers? I don't know. Different clients, diverse clients. We got PSUs also. We got meter manufacturers also. We got EPC smart metering EPC. A lot of clients, marquee clients, big clients. Then moving on, moving on. India's drivers. What are their growth drivers? What is the future outlook looking like? Okay, the surge of India's power appetite. According to CRISIL, which is a very respected credit rating organization and a data analytics organization, India's infrastructure spending will surge to 143 lakh crore rupees between fiscal year 2024 and 2030, more than double the 67 lakh crores spent between 2017 and 2023. So infrastructure spending will double in the coming years when compared to the last 6 years. Of this, rupees 36.6 lakh crores will go towards green investments, a five-fold increase from the previous period. So you can see government projects are a very important part. Government spending is a very important part for this company's growth, to this company's growth. Then again, government initiatives. The 2025 power sector budget has been raised to 218.47 billion rupees from 205.02 billion in 2024-2025. Okay, allocation to Ministry of Renewable Energy has increased sharply to 265.49 billion. The RDSS scheme, which you already covered, which is for which includes smart metering, includes upgradations of the distribution system, has received 160 billion rupees. Okay, 200 billion to another Pradhan Mantri Pradhan Mantri Surya Ghar Muft Bijli Yojana. Okay, it's aimed at achieving 30 gigawatts of rooftop solar capacity by 2027. And rooftop solar, RMC Switchgear does make. It's one of their products we saw earlier. And again, you can see, you can read all of these things. You can pause and read. Massive, more growth drivers, more shifts towards green energy and sustainable energy. All right. See, at the IEA, International Energy Association's World Energy Outlook projects India's energy demand will grow by 35% by 2035, with electricity generation capacity tripling to 1400 gigawatts. So there are big pushes, there are big external pushes towards renewable energy and investment in power distribution systems, upgrade them to make them more efficient. And that is why, okay, and these investments are, of course, going to help RMC Silkware because it is in those in industries. Then the SMC enclosures, one of the products, they've added production capacity of 3 lakhs. Their current capacity was 3 lakhs, so they have essentially doubled their capacity. So of the clients they've added are like Adani, Monte Carlo, IntelliSmart, Genus, and to finance this expansion, they're using their own reserves and they're using a term loan. Using a term loan. Moving on. What do we have? Yes. Um, some financials. I think we've already seen this. You can see the EBIT, you can see the revenue grown rapidly, 84% growth in revenue in fiscal year 2025. EBITDA has grown rapidly, profit before tax has grown rapidly. The profit after tax has grown by 11, no, 11 1%, 101% in fiscal year 2025, 31.46 crores. You can see the growth before that also in all these things. Um, Accounts payable. How many days does the company take to pay its suppliers? The larger this is, mostly better, but still 138 days. Sorry. Accounts payable are 77 days. So they take around 77 days to pay their suppliers after they have taken the supplies from them. Collection period. How many days do they take to actually collect the money from their customers after already supplying them the product? 138 days. So this negatively affects cash flow because they have to pay the suppliers first and then they get the money from their customers, not the other way around. Current ratio 1.52, so the current assets are more than the current liabilities. Debt to equity 0.45. Okay, they are rapidly expanding. They will be taking a lot of debt. Inventory in terms of days. How many days does it take to convert inventory into revenue? This has declined to 21 days. That's a good thing. Net working capital days. How many days does it take to convert working capital, net working capital, current assets minus liabilities into, I believe, cash flows? I think so. To convert into cash, and to convert this into revenue. So lower this number, the better. So net working capital days has also seen a sharp decrease to 82, which is a good thing. Inventory days declining to 21, that is also a good thing. The lower these numbers, the better it is for the company. It signals higher cash flow and efficiency of the company, better cash flow management, and better efficiency of the company. Then, finally, a new segment, another revenue segment. Okay, diving into water management. The company is diving into water management. Now, how? Intelligent Hydel Solutions Private Limited. In 2024, RMC Switchgears successfully launched a new subsidiary, which is Intelligent Hydel Solutions Private Limited. They have a majority 51% stake, okay, which represents a major advancement in the field of water IoT solutions. IoT is Internet of Things. Basically, there will be hardware, like computer hardware or technology hardware. This will be integrated with sensors. So it will have sensors. This hardware will have software embedded in it so that it can give data, it can take data, and it can give data in real time. So it's important, let's say, uh, in the distribution, treatment, conservation, and monitoring of advanced wastewater treatment. So wastewater. So with IoT, let's say you can monitor stuff. Where's the water going? How much is coming? Maybe not the best example. I should stop. Okay. Better management of water resources. So this Intelligent Tidal Solutions Private Limited, what is it going to do? It's going to focus on providing smart meter management solutions, smart water management solutions, including systems for distribution, treatment, conservation, and monitoring, as well as advanced wastewater treatment. Then, demand for smart water meters. As smart meters measure electricity, smart water meters must do something similar for water. A recent analysis estimates that the smart water meter shipments will grow from 0.59 million units in 2023 to 1.92 million units in 2030. India's smart water meter markets is expected to grow very fast at a CAGR of 18.9%, reaching 180.2 million rupees by 2030. Small market, but fast. So that was it. That was RMC Switchgears Limited. Currently, the company derives the majority of its revenue from electrical EPC. We saw this electrical EPC, but all of these segments seems to be having some big growth drivers for the future. Okay, solar EPC and solar products. This industry is expected to grow massively in the future, and there are some massive government schemes that we saw. What did we see? More investment for like more investment in renewable energy, more shift towards renewable energy, more EVs, more electrification will require more energy, more distribution in the power distribution system. Sorry, more investment in the power distribution system, power infrastructure, power trading and distribution infrastructure, more spending towards that, higher rate of spending and more spending towards that. Then the companies also foraying, diversifying into smart water management with their Intelligent Hydel Solutions Private Limited. Okay, it's going to focus on water management and India. India does need good water management. Okay, a lot of water is wasted and people need water. Water is a necessity. Okay, India needs to take adequate measures now to curb potential water scarcity. Okay, so this urgency is expected to drive significant growth in the country's water and wastewater treatment market. So, solar EPC, solar modules, it is a very smart, it's a very fast-growing industry, fitted to do massive electrical EPC. The government is spending more, so I guess a higher growth rate may be projected, maybe doubling the spending, infrastructure spending in the next 6 years. Total, I guess, government plus private. What's expected? This is expected. Double spending will may lead to higher growth. Smart meter market again does come in that governments and infrastructure spending. So that was it. That was RMC Switchgears and any other company people want to get analyzed. You can comment down below. This is not financial advice. And finally, not the best cash flows to be honest. Not the best cash flows. But let's see with the integrated supply chain. They're saying they're backward integration with manufacturing of solar modules. And we did see inventory days going down, right? We did see inventory days going down. Where is it? Oh, we did see inventory days going down. We saw net working capital days going down and did go down to 138 days. Collection period did go down to 138 days. Accounts payable did increase to 77. Okay, accounts payable, the higher it, okay, like this gap, the lower it is, the better for the company. So let's see. Maybe this is a good sign. Maybe this is a start of something good. Not saying it is. Maybe it could be a start of something good. With like net, if this continues to decline, if these 2 days continue to decline, okay, if there's not a lot of rise in debt, not a lot of interest payments, and if the gap between these two continues to go down, then who knows? Maybe the company will produce better cash flows, and at least it has always provided positive cash flows. Okay, which cannot be said for many companies in their nascent stage. Even in the nascent stage, like it reached 6 crores. 2015 went down, reached another high of 9 crores. Not only one, 3 crores, 9 crores went down. It reached 15 crores. So maybe let's see what the future holds for the company. And one more thing, um, let me do this consolidated, very big. Yes. Okay, these are the working capital changes. So working capital, current assets minus current liabilities. Now, if current liabilities increase more than current assets, that may be seen as a bad thing. Your liabilities are increasing more than your assets. That's not good. It can be bad. However, it's great for the company's cash flows. Remember, let's say your short-term loans increase. That means you have more cash. You actually have more cash in your hand. So it increases cash flows. However, however, let's say your sales have increased, but your trade receivables, okay, your sales have increased, but you have given your goods out on credit. So it goes to trade receivables, which decreases cash flows. What else can we think of? Current assets, like for example, a company has invested in mutual funds, short-term mutual funds, let's say. This will decrease the cash flow because cash has gone out of the hand of the company to where the mutual fund. However, if it takes a short-term business loan, it will increase cash flow. See, if the company receives advances from customers, more advances from customers, it will increase cash flow. It's a working capital. So you can see working capital, it's shown negative here. Why is it shown negative here? Current assets are increasing more than current liabilities, basically. See, receivables, Money owed by customers, it's increasing by 10 crores, then 17 crores, 33 crores, 34 crores, 57 crores. Good thing payables are also increasing. 4 crores, 15 crores, 3 crores, 8 crores, 57 crores. So in ideal scenario, if these working capital changes only eat around 20 to 26 crores, let's say in the next 5 years, miraculously, it only eats around 30, 40 crores. And the company is projecting, what is the company projecting? The company is projecting 300 crores worth of net profits. So even let's say this doubles to 50 crores. So 330 crores of net profits, maybe it can produce some massive cash flows of 200 crores, 150 to 200 crores. Let's see what this holds up. Let's see how the working capital change is holding up. Very interesting to see in the future. One thing to keep an eye on. So that was it. That was RMC Switchgears Limited. Let's see what the future holds for the company. Bye.